It's Wednesday, June 16th. This is The Street Live. I'm Katherine Ross, and I am, of course, joined by the one and only Jim Cramer. Jim, let's kick it off with what you're watching in the markets today.
Well, look, I'm saying right now, point blank, whatever's happening right now is meaningless. In another few hours, we're going to have Jay Powell talking, and if he doesn't use my advice saying, listen, I'm not making any news today, there'll be a moment where he says that they're looking at something that is disturbing the market, and the market will get hammered. So let's be sure that you understand that right now is just the prelim, and the prelim is not the what matters on the card. It's the actual, and the actual is going to be tumultuous.
Well, so let's focus in on the last-minute advice you have for investors on the Federal Reserve, because, of course, if you guys didn't know, if your heads were stuck in the sand, we do get the Federal Reserve's announcement later today with a press conference from Jay Powell. So, Jim, how would you want them to approach the markets leading up to this decision?
Well, I think they should look exactly about what we're doing for Action Alerts, where we've raised a lot of cash, and the club knows that why have we done that? Well, this is a seasonally weak period, and we want to be ready to do some buying. I feel very strongly that we put some stocks on, that if the Fed says all systems go, then you should be buying a new core. If the Fed says, wait a second, it could be a moment where you have to start raising, every stock goes down, and when every stock goes down, you revert to our FANG names. And some of our high growth names, our senior growth names. So all of that is what's on the table.
And of course, if you guys didn't know, then you can join Jim live tomorrow at 11:30 a.m. over on ActionAlertsPlus.com as he does his monthly members only call. Jim, I'm personally excited to see it, especially after we get this decision. So I'm looking forward to it. And with that, I actually want to turn our attention to your Twitter
I will talk about. I will talk about the real. What could really hurt the bull, not this. And I will give a couple reasons of what we should look out for. And then Jeff Marks and I are going to have to talk about, we have a number of new initiations. I promised viewers that we would not go an hour and a half this time. A lot of people always say the same thing, Catherine, which is that, look, the longer the merrier. But the fact is, we have to give people a break. They have to go do their jobs. So I'm going to try to keep it to an hour because that's what TV is about. Of course, this is digital TV, not to just endlessly go on. So we're going to keep it tight so that people can learn everything that they need, and they will not be subject to the prattle that sometimes I go on when I am really excited about something.
Well, and it's the perfect lunchtime watch. So, Jim, I want to turn our attention to your Twitter presence because you tweeted earlier this morning that you've been watching Clean Energy and DraftKings, and you noted that you have no problem with the WSB crowd today.
No, I like them today. I mean, they're not trying to hype some stupid stock that doesn't deserve to be up. I don't detect any sort of pump and dump going on today. I don't see any illegal activity, violations of 10b-5. It looks like that right now this is not a Justice Department day. What I do see, clean energy fuels stock I like very much. Why? Because they're using renewable energy. I think that's great. DraftKings, which I work for, everyone should know this, right? I do my a bull market. It's an actual bull market show when it comes to football. And what's most important is that this one division that Hindenburg is so worried about, this ST division, that could be sold for $1 tomorrow. I mean, you can sell for $1. It's only 8% of their revenues. And if it was sold, then what would happen is that Hindenburg would have to switch direction and go to a buy. So, again, bull market fantasy is a DraftKings product. So you can say Cramer is just owned by DraftKings. I would come back and say I'm owned by the facts. And the facts are that ST could be closed or sold, and then Hindenburg would have to go positive. Yeah, they may think it's too expensive, but that's a valuation call.
Well, then, Jim, you also tweeted about oil, and this was a really interesting tweet for me because you said oil is the enemy. So can you explain what you mean by that?
Well, oil is the thing that gives the reporters the ability to hector the Fed chief. In other words, let's say you say, are you worried about inflation? And he says no. And you say, well, come on, oil is at an all-time, at a high for the cycle. It's an easy thing to embarrass the Fed with. And I think it'll be used as a tool to embarrass Jay Powell because he, I think in a way that he should never have done, has an unlimited number of questioners. I mean, sometimes I think, okay, so let's bring on the questioners from the junior high newspaper at Enfield. Let's bring on the questioners from the Springfield High editor-in-chief. Okay, now it's time to switch to the TJ because it's a local school. I mean, honestly, the Fed has to stop giving everybody a chance. It's almost like he has a lottery, where Mr. Chairman, first time, long time. How about inflation? I mean, he's got to stop that.
So earlier this morning, Jim, you, Phil LeBeau, and Scott Wapner had the opportunity to sit down with GM CEO Mary Barra. Now, one thing that you tweeted following this interview, or actually kind of in the middle of it, was almost that she's doing more for the environment than almost any CEO in the world, and that's a direct quote from you. So obviously, thanks to CEOs like Elon Musk, we know that investors are highly curious to how executives are pushing their companies. So does Mary Barra make GM a must-buy?
Look, I love the fact that Tesla has done great things. I love the fact that Elon Musk has done great things. But the fact is that GM and Volkswagen are the two companies that could do the most to be able to reduce emissions of that kind, of auto emissions. There's long-haul truck, which is why I like hydrogen and clean energy fuels. Those are bad. And then, of course, there's the Chinese doing whatever the heck they want, particularly with their coal plants, but they get away with murder. We know that. Actually, physical murder, too. But I genuinely believe that Mary Barra has created a situation where the battery business is worth almost as much, if not more, than the actual auto business. So the stock remains undervalued. I know the stock's been a winner. Winners win. There's a real quote for you. And I think the GM is in excellent shape. I still like Ford, obviously one of the largest, not the largest position for Action Alert. We will address Ford tomorrow. Jim Farley could have that stock at 25 if he could only have the actual cars and trucks that he's made that are in the lineup.
Definitely two companies to watch. Another company that you like to watch, Jim, is Oracle. And Oracle's guidance did miss expectations, but the quarter did beat on the top and bottom line.
God. Come on. I mean, Safra Catz has endlessly been conservative. And every time it happens, the jackals come in and sell Oracle. And then when cooler heads prevail, they buy Oracle. Take a look at the chart. This is just endless. Why? Because people don't understand that Safra Catz is a very conservative person. So we had a number of price target increases today because the analysts know, and the sellers who will keep the stock down all day today, and probably tomorrow at the opening, are truly just opportunistic about the wrong way. And I think that it's just wrong to sell the stock, and people will regret it. In the same way they'll regret selling Roblox at 81 when Roblox comes roaring back when school ends. That's a twofer.
It is twofer. Thank you, Jim. I love when you give us extra stocks to watch. So it sounds to me that if you're saying that people will regret selling Oracle today, should they be buying it instead?
Well, like I said, I mean, what happens is brokers have orders. They might have an order to sell 10 million Oracle. So what they do is this is just Wall Street Confidential. I was trying to explain this once. I'm going to try to explain it again without saying that it's nefarious. But they sell the stock. They try to get the best price possible, the way to get the best price possible is to save your last bit of stock and knock the stock down so you can say, hey, look, I got a price. I got 77 and it finished at 76. And then tomorrow morning, they'll have the tag ends of what's left. You also have the Fed to deal with. But you do want to buy some now, and if the Fed says things that are positive, you wouldn't have gotten any stock in. But otherwise, you buy some now and you buy some tomorrow.
And then on Mad Money last night, Jim, you discussed Jamie Dimon's comments about how the big bank, JP Morgan, was struggling to keep up with companies such as Square and why this leads you to like FinTech.
Yeah, I mean, I did a Real Money piece about that, too. I think he's got tremendous FinTech heavy because even though he's got a couple trillion under it's run, not as much, by the way, as Larry Fink at BlackRock, they're really caught because they're in a regulatory web. They have many different organizations that regulate them, and that's not what Square has. Square can do whatever it wants because Square is a tech company, and I think that basically Jamie's kind of fed up that he is hamstrung and they're not. But it was easy. He could have set a lot of this up. I felt that what the real issue here is that he didn't listen to the customer. And that's what he should be upset about. It's not listening to the customer. It's what the customer wanted.
And finally, Jim, your stop trading this morning was based on a Citi note on Boston Beer, where they cut their price target on the stock, despite the fact that we are, quite frankly, in the summer of reopening and everyone's out there partying. So you did note that maybe the stock is too high. Does it need to come down before you can buy?
Yeah, that was a tough call because this stock trades on its Nielsen's. And that note, and very good analysts, indicates that the Nielsen's have peaked. And there's charts in that note which tell you absolutely that it's peaked. So I think that stock's got to come down. I know it's come down a little bit already, but if I owned Boston Beer, I would sell it.
Well, and that's interesting, Jim, because with all this push for seltzers and stuff, when the chart's telling you to sell, you know, what's your approach to when an investor wants to buy it again? Do they need to see chart action?
Well, you know, this is a long-term call. I mean, this is an inflection call. That the Nielsen's are turned down, so I'm not thinking about buying. I'm just thinking about selling.
That's fair, Jim. Okay, well, Jim, is there anything else before we hear from the Federal Reserve? I always like to ask you, is there anything that I've missed in my... Yes,
well,
Jim?
I mean, I do think the financials continue to trade lower. That would be if the Fed signals that, look, they might have to tighten. You just go buy some JP Morgan, go buy some Goldman Sachs.
All right, and with those two stock picks, we'll end the show there. Thank you, Jim, for joining as always, and thank you for tuning in. I'm Katherine Ross, and we'll see you tomorrow.